I'm Charlotte McLeod with investingnews.com, and here today with me is Clem Chambers, CEO of anewfn.com. Thank you so much for being here. Always great to have you.
Always great to be on, Charlotte. It's, always good to talk these things through, because I use these podcasts as much as anything as a way to crystallize my thinking, because, talking to you, for example, makes me work out my ideas before they come out of my mouth. And, that's very, very useful in the market, because the market, it doesn't take prisoners. And if you haven't got your ideas straight, you're going to have a problem, aren't you?
Yes, I think you are. Well, these are always useful for me, so glad to hear that it's useful for you as well. I think we've got a number of different directions that we want to go in today, but I thought we could start as usual with gold. We've started to see some price movement in the metal over the last couple of weeks after kind of being in the summer doldrums for some time. So, of course, I think investors are looking at this and wondering, is this breakout real? Or is there still further to fall for gold? So what's your take on gold right now?
Well, I think it's going to be going sideways from here, and it will thrash about, as we've seen, and it will kind of go sideways. And I would expect it to go lower and, in 3 months' time to go higher and then go lower and go, I'm not expecting it to make any dramatic one directional move. I'm not expecting it to go back to 2000. I'm not expecting to go back to 5,000. I'm expecting it just to thrash around in a range, and that range to narrow and tighten, and then to become very predictable before it decides anything else, before there's another big run, if there is going to be one in the near term. And I probably think there probably won't be a big run in the near term. And it's like anything, the more YouTube you watch, the more you start to get swayed by everyone saying, it's going to the moon, it's going to the moon, it's going to the moon. And that's all everyone seems to say about gold. But I'm expecting it to kind of hang around here. What I was looking at while I was waiting to come on the show is platinum. And I think I'm going to buy some. It's like, have I got time? And, I think I'll buy a platinum stock, because platinum, that looks interesting. But again, when I look at the chart, I don't see any magic there. I mean, back when they were all taking off, I would look at those charts and go, God, that's going to go a long way. And I look at charts like for banking, and I look at the banking charts and I go, wow, look at those charts. Wow, I love them. And I want to participate in that. But I look at the precious metals and I go, meh, as they say, the young people say. But platinum is looking interesting, mainly because I just see it going to one with gold. So, there it is down at 1800. It could easily go 3.6, which is, a doubler, and I like doublers. And, so I'm kind of tempted, but I'd only put my little finger in and get like half of what I call a clip, because when I buy these things, I go, right, oh, I like IBM. I'll buy a clip, which is a certain amount of dollars. And, I think when I'm going to buy a platinum equity, and I'm going to buy half a clip, because I'm not convinced. It makes me want to, scratch that itch. Unlike gold, which doesn't. Unlike silver, which doesn't. But I look at this particular platinum stock, and it wants me, I want to scratch that itch. And just because people are going to say, which one is he talking about? I'm talking about, I can never pronounce a blooming thing, Sibanye-Stillwater, which is what I would call a crazy stock. And I did very well on the way up last time round. Of course, I got out of it when I got out the other precious metals. Thank you very much. And it came down like a lead balloon from 25 to like 7. I mean, what kind of stock is that? And I was watching it, and it was kind of about 9. I thought, should get it really. I'll wait till it goes over 10. No, it's like 12.5. And I can't, no, it's not. It's 11 and a bit. Oh, okay. It hasn't gone over much over 10. But, it's a wild, crazy stock. I don't like wild, crazy stocks. I like boring ones. I like ones that just go, chunk. This morning, I was looking at putting a hedge on between Anglo-American and Rio. And I ended up not liking it at all, because you'd end up, capturing a 0.5% dividend off Anglo-American, and end up having to pay a 4.5% dividend on your short position on Rio. You don't want to do that. So, that's the sort of thing that I get up to. But, I end up looking at Rio and going, oh, that's rather tasty. I like that. Oh, I like that. 4.5% dividend. So 1 minute I'm going short on it, and next minute I'm going long on it. But, the actual mechanism's changed. Rather than a nice market neutral pair or very similar businesses that might, separate out or coalesce. I end up looking at one which I go, oh, I like that. And I did that a few weeks ago with a British engineer. It was a beautiful pairs trade, and I probably would have done well from it, but I couldn't. I would have done very well out of it. One company, I looked at that and I went, that's done really, really well, and I don't really want to go short on that one. That's a little bit of a crazy stock. But I do like the long pair of that. I like the long guy. And it's great. It's got a fantastic dividend. It's a fantastic business. I'll have that. Forget the short part of the hedge. And then 5 days later, the short part of it collapsed 10%. So, but, you've got to, you've got to follow your theses, or thesar. I never did Greek. So, you have to think it through and then do what's appropriate, because you're never going to get it 100% right. I bought before, just as it broke out on gold, I sold it at 5.2. I didn't sell at 5.5. I wouldn't have even tried. It was just, I'd had enough. So I got out. And, but buy near the bottom, sell near the top, or buy at or near the bottom and sell in the middle. You're too great. That's what I always do. Not by choice.
Well, I think that makes a lot of sense. So good to hear you've got a platinum stock that you're interested in. And you mentioned the platinum price you could see down the line equalizing with gold. I think let's dig into that a little bit more, because when it comes to the precious metals, I think people might tend to kind of group them all together. So what are the circumstances that you see coming where we see platinum have that breakout to a higher level?
Well, I'm a bit primitive when it comes to these things. And it's one of the reasons I'm not a fan of gold, to be honest. They make 25,000 tons of silver every year. Okay? 25,000 tons. That, you wouldn't want to drop that on your foot. That's quite a lot of tons. Gold, 3,000, I think it's going to be 400 tons, 3,400 tons this year. But I always say in my brain, 3,200 tons. Okay? So if you take the price of silver to gold, it's not 8 to 1. So why isn't silver an eighth? Why isn't silver $500 an ounce? Well, people love gold a lot more than they love silver. And central banks are buying it because they're a bit worried about this wild man in the White House and the guys in China who are, acting up somewhat, even though she's going to go visit Donny in September, which please get on. Please have a nice round of golf. Please be friends. Please. Anyway, so, gold has been bought because of all the wild men out there, and they're quite thick on the ground when you think about it. I mean, Putin, how's he going to resolve this situation? Looks like he's going to have to resolve it, and it isn't going to be by winning. And you look at him, he looks in a bad way, does Mad Vlad. He looks like he's, just look at this latest video of him talking about the Europeans seizing the ships. He looks borderline like a broken man. So, that's a pretty dangerous situation. There's a lot of dangerous situations out there. You don't have to look past them straight Hormuz too far to see that. And central banks buy gold as the currency of conflict, because if you're going to get into one, you need it. And you can't, you've got to lay it in. You've got to DCA it. Essentially, you've got to build up your reserve. You just can't go out and say, I'll have 5,000 tons, please. Bang. You just can't do that. There isn't there to be had. You just have to go and sweep it up. Well, of course, that gives upward pressure. Well, when that pressure dropped off at the beginning of the year because of a little bit of issues in China that meant that maybe we weren't going to have World War III next year, gold stopped going up. Doesn't mean it won't start again on that. But 3,200 tons versus 25,000. Now, the silver guys will say, well, that's why silver's going to go to $500 an ounce. It's going to catch up. And I go, oh, okay. I actually say, no, people just like gold more than silver. That's just it. Anyway, so then you look at platinum and you go, well, how much of that do they make? Have a guess, Charlotte. How many tons a year of platinum do they mine?
I couldn't tell you, but it's got to be a whole lot less than gold and silver.
Correct. I'll tell you how a lot less. 200 tons.
Definitely a lot less. Yeah.
Zero. Okay. And what's more interesting? Okay. So I'm a gold miner. I dig my gold out. Okay. And I sell it to, I don't know, the Polish central bank. What happens to it? It goes in a shed, and there it is. Don't go anywhere. Nobody eats it. It's the noble metal. It's indestructible. It has no fear. It has no remorse. It doesn't go anywhere. It is still there. Platinum, which is also a noble metal and you think would be indestructible, 200 tons a year of that gets blown out the back of cat converters onto the freeway. So there's no increasing supply in storage. Yeah. The only thing is that there's a big backlog of cat converters that are going to get munched by the recyclers and turned back into platinum. So that's the thing. But coming out of the ground, there just ain't much of it. And it all gets used. I mean, literally consumed. Yeah. Now, if you're following AI, you'll follow a big bottleneck. It's a very big bottle and it's got a very thin neck and it's called electricity. And electricity is destiny. Okay. So if you want to send your electricity to all the things that are going to keep you, as number one, like AI, like reindustrialization, like all that stuff, that you haven't got enough electricity for, where are you going to get it from? Well, you can build nuclear power stations. They're doing that. You can build all sorts of things. You're doing that. Elon Musk put some gas turbines in his server, his data center, and they told him to take them out again. You haven't got permission for that, have you? No. Well, get them out. Okay, slowly. It might take me 2 years to get them out, but I'll do that for you. Yeah. So one place you get your electricity from is by reallocating it. And, electric cars. If you start reallocating electricity away from electric cars, you're going to get a lot more internal combustion engines, aren't you? The internal combustion engine, in my mind, is not going to go away anymore. In fact, it might actually be a route that electricity-strapped countries take to redirect electricity away from vehicles to other usages. And boy, there's a real shortage of electricity in Europe, a borderline crisis, not there yet. Thank goodness the French didn't get rid of their nuclear power stations. They must be chuckling to themselves, the French. We kept the nuclear power stations. Now we own you, monkey boy. But anyway, so that means if the internal combustion engine's not going away, that means platinum palladium. And also lots of chemistry and fuel cells and reindustrialization and all that. 200 tons. So but once upon a time, in a galaxy far away when I was a young man, platinum was 1-to-1. At one stage, it was 2-to-1. Now, it's not as if they found a lot more. It's not as if a lot of it isn't coming out of Russia. Oh, really? And South Africa, that's not so smart either. They're not friends with us anymore. Oh, and Canada and America. Oh, we keep slagging the Canadians off. So, geopolitically, platinum and palladium is quite fragile. And I'll tell you what, funny story. Guess America's got all these sanctions on Russia, obviously. Well, guess what is outside the sanctions and Russia is free to sell to America? Oh, platinum and palladium. I wonder why. So, it's clearly very, 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 very critical. And clearly they make none of it. And when you look down all the strategic and critical minerals, which is the industry I'm in at the moment, and will be in for quite a long time, and you talk about, yttrium, gallium, germanium, and all that crazy stuff, that all the unpronounceable iums. There's no open market for those guys. You can't go, I'll have some iridium, please. Sell me an iridium contract. Give me an iridium mine. No, because it comes out as a byproduct from stuff. So a lot of things doesn't have much in the way of pure play. Uranium, very hard to get pure play on that. In fact, about the only one you can get is through the roof anyway. And the other one is on Russia's border and might not be a listed stock if Putin gets annoyed. So a lot of these critical strategic minerals, which are clearly going to have already repriced. Some have repriced 10x. You just can't get access to them. you certainly can't buy them. Everybody's trying to buy them because they can't get them. And, the Chinese won't sell them to you. Oh, yes. What a great business. If you could ring up China and say, send me a quarter of a ton of yttrium, please. You'd be in the money because they sell it to you for $50,000. Well, they wouldn't sell it to you for, they'll sell it to their mates in China at $50,000. But you want to buy it out here, they're going to be charging you $200,000 or $300,000 for it. Yeah. So, rare earth, for example, but it's not all rare earth. There's 11 or however many rare earths. I can never, I can't even pronounce them, let alone count them. But, there are non-rare earths like scandium, for example, and gallium. I don't think it's a rare earth. I can't remember now, but there's plenty. Chromium is a strategic mineral. And, China's got its grip around those, but you can't play the game because they're not in free markets. They're not in open markets, and there aren't really anybody. It's not easy to get exposure to it. Yeah. You can get some exposure to rare earth through the Sprott, ex-China rare earth ETF. So that's a nice thing. And, it's even quite difficult to get good exposure on something like copper. It's getting easier. But when you go into all those really, really, really cool and groovy minerals, they're not there to be had. And platinum is on the borderline of that world of being, a bit obscure, a bit hard to get hold on. It's got a nice ETF and it's got a couple of 3 or 5 nice platinum companies out there, but it's not a plethora like gold where, your spot for choice is hundreds all the way down from people. I think we'll do gold all the way up to the biggest mines that you can imagine with gigantic holes. And royalty companies and explorers and developers and miners and super miners and your spot for choice in gold. And you've got a very good selection in silver too. But once you get off that pathway, you're into the weeds, I would say, quite quickly, which can be an opportunity if you want to become an expert and know, this ABC gold is fantastic because, it's run by a guy that's found 67 gold mines before and he digs it up himself and he's all his teeth are gold and he's very famous. And, those guys, they've never seen a gold mine in their life. They're just mining Toronto. And we've all seen those sort of mines. So if you're a real expert, you can drill in. But if you're just being a general portfolio builder, there's not that much choice.
Well, good context on platinum. I think we can see the current and historical case there for higher prices. And there's a lot of directions I want to follow you down. Before we leave precious metals, I have one more question, which is, what would it take for you to get interested in gold and silver again? I think you did a great job of telling us on the way up, it's time to get in. And when it was close to the top, you let us know when you're getting out. So what would make you become interested again?
It won't make your viewers happy. They won't be happy. They'll say, who is this clown that got it right twice? He's third time unlucky. He doesn't know what he's talking about. 3,500 on gold. I will, unless something happens to change my mind, start to dollar cost average to stack. You see, when I bought, I wrote it all up in Forbes if you want to go out and look to make sure I'm just not predicting the past. When I called that breakout, that was exciting. I was then in speculation mode. I had actually DCA'd in quite a lot because, you have a diversified portfolio risk. But I then went, trader on it and bought mines and bought ETFs and silver stuff and all that good stuff. I loaded up. But at 3,500, I won't load up. I won't be loading. I'll be like doing what I'm going to be doing with Sibani, Stillwater. I can pronounce Stillwater. I'll just be buying half a clip because it's making me itch. And I've got to buy some, but I don't want to buy a proper amount because I look at the chart and I go, oh no. But the other half of me goes, look, come on, it should be 1-to-1 with gold. What are you hanging about for? Oh, look at that chart. Oh no, I don't like it. Oh no. So, I only go half because I will. It's just, this is a market which you have to be long in. And you can be long and wrong about certain things. Yeah. And you can be long and right for the wrong reasons and all those good things. But basically the market is going that away, not that away, but that away. And therefore you just jump on the train. Maybe you jump in the first class compartment. Maybe you jump in the second class compartment, but you get on the blooming train. And it feels like that with platinum to me. It feels like it's part of the train. And as I recall, and I often get this backwards, I think platinum is for diesel cat converting, and palladium is for petrol. Yeah. So palladium is also interesting. And really my natural tendency would be to buy, palladium because I'm contrarian. I'll buy the one that is the most, controversial, or the one that will say, no, don't do that. That'd be the one I'll buy. And that would be palladium. But in this case, I'm looking at platinum and it says to me, yeah, come on. You should have some. Come on. When I look at gold and I go, oh, no, not yet. No, give me 3.5. Oh, silver, 60. No, give me under 50. Give me 45. Give me 40. Yeah. And then if it got near it, the closer it gets to those numbers, the more I'm going to go, ooh, I should start picking some of them up. Yeah. And of course you look at the miners and you look at the physicals, and then, at some point it all comes together and you go, God, those miners are looking cheap. Oh, that's got a fat dividend. What's going on there? And that can't be right. And, I'm about to violate one of my rules with platinum, which is if you think it's good, it isn't. If you know it's good, it is. But what I do know in my mind anyway, in my brain, not necessarily the world won't necessarily agree, is I don't think it can go much lower. So, I could buy it and it could go, it's 11 and a bit now, for example, could go to 8 and I wouldn't care. I just wouldn't care. And if it went to 5, and unless something obvious happened that meant that it was a bad trade, I'd double up. That's why I'm buying half, because I'm expecting to be wrong, and I'm expecting to be right out there somewhere, not here. So I'll buy half and then I'll be watching it. It's like a test. I'll be watching it and it'll be doing its thing and I'll be going, no, and you'll get a rhythm and a pattern of the way that it trades. And then, you're on your way. And unless something comes out and makes it absolutely not a thing, then you just stick with it and see how it goes. The interesting thing is, there was a stock that I bought last year. I mean, I think I posted about it on my Substacks and on my YouTube channel. And it was a little, I do these private membership things on YouTube where I go, here's a little bit of secret sauce. When this does that, you want to pay attention. Or it can do this, and that's really good. And one of those was this company, crazy UK company called IQE, and it was at 7. Yeah. And I'd bought a shed of it at 7, because it was silicon and it was chips. And this was before the chip thing went nuts, but nonetheless is one of the few chip things left in Britain that hadn't been strip mined by the Americans or the Chinese. So I thought, this is absolutely cheap as chips, absolutely painfully cheap. I'll have quite a lot of those. Anyway, it did one of my little signals. It went, neep. I said, look, it's gone, neep. And this is the chart you look at. And when that chart does, neep, you want to pay attention. Anyway, it went straight to 20. And I went, oh my God, get out, run away. So I ran away. It went straight to 50. And since then, it's been going like that at 50. Now, if you look at that chart, you'll see a chart that you're going to see on all these AI companies, and you're going to see on gold and silver. So it went up like a rocket. It came down hard, but not much. A bit like gold. Yeah. And then it's now thrashing around. And that waveform, I just looked at it today and I went, that's the waveform that all these companies are going to go through. And then they're going to move up again. There's going to be a pause. And then there's going to be a lot of mucking about. And everyone's going to say, it's going to go. And it doesn't. Oh, it's going to go. No, it doesn't. And everyone's going, oh, it's going to go down. It's going to go up. It's just going to do that. And then suddenly, at some point, it will go on another run. Well, particularly as all the AI things have done that. But if you look back and you look at all the silicon ones and all the AI ones, and you just go back in time, you see it in gold and silver. There it is, the same waveform. So it's like, and copper. There's a similarity going on here. And it is a similarity because it's all about money flowing away from one area or coming into the market and then heading for the next big thing. And it just slingshots it up in a hockey stick. And then trees don't grow to the skies, right? Which is one of those catchphrases. I'm just writing a book called 50 Brutal Rules of Investing, which I've just finished the first draft of. And that's one of them. Trees don't grow to the skies, which means, trees grow, but they don't get into orbit. Yeah. There's a limit to how much the trees grow and a limit to how much these hockey sticks go. So they did their hockey stick pull back to a proper level, which is kind of gold is at right now, I would say, 3,500 to 4,500. And it will now do that. And then what traditionally in my book, my crazy book of technical analysis, it goes, and then it stops doing it. And then it will decide where it's going to go. And normally, in this case, it will be up. So you'll look at something like Intel. That's one I called on your show, I believe. Yeah, when it was 20. Yeah. Anyway, it went to 140. I got out of 50-ish, just below 50. But anyway, for other reasons, never mind. But anyway, that was a good profit, I can assure you that. But it will do that, and it is doing that now, and then it will do that, and it will do that. And when it calms down, that will be the sign that for the next run of the NASDAQ bubble. And that will be 6 months, something like that. And if it does that, we're even earlier in this run than I think we are, because I think we're in 98. But if it does that, we might actually be in 95, 96, which would be pretty amazing. But the NASDAQ, the stock markets will continue to be on a run at least until Trump leaves. Yeah, because they'll be desperate to get his replacement in there elected, whoever that might be.
Well, that's an interesting point that I wanted to bring up because I do hear a lot of concerns about, is there a bubble in AI? Is there a bubble in the stock market overall? So for you, when you're looking at that, we've still got, I guess, at least a couple of years then for it to run. Is that how you're thinking?
Okay. No, my thinking is a bit different than that. People go, oh my God, there's a bubble. Oh, run away. It's like, no, there's a bubble. Come on in. Yeah. The only trouble with the bubble is when it ends, not during the bubble. During the bubble, it's great. You want to be long, definitely long in a bubble. You just need to know when to get out or not be greedy and not think that you're a genius. Yeah. Spot a bubble. Oh my God, we've now gone into a potato bubble. Well, go long potatoes then. Oh, but it's going to crash. Well, when? Oh, I don't know, in about a year. Well, then sell in 9 months then. I mean, don't fear the bubble, fear the bust. Yeah. I mean, gold was a lovely bubble. Oh, a lovely bubble. Oh, no, it wasn't. No, not a bubble. No, it was a bubble. It looked like a bubble. It made a sound of a bubble. Everybody behaved like it was a bubble, and it kind of burst. Yeah. Now, maybe there'll be another run. I don't think there will be, because commodities don't do that. Stocks do, but not commodities. Commodities take a rest for 2 or 3 years and then do a smaller version of it and then go to sleep for 20 years. That's kind of what commodities do. I'm sorry. I'm so sorry. But anyway, but stocks, they can bubble, rest, and bubble away. And markets can bubble for a long time. I mean, I would just say to anybody, go look at the NASDAQ in 2000 and see how long that bubble lasted and what was the shape of it. How did it go? How did it run? Look at gold. Look at that boom bubble bust that we just had. It's not even, you don't have to go back that far. Yeah. That's what you get. I mean, the mother of all bubblers is Bitcoin. It does it every 4 years. Regular as clockwork. Yeah. Just go study it, because that is not about an asset. It's about a market dynamic. It's about market structure. And that's what a bubble is. It's about market structure. It's not about anything in particular. It's about the way that markets behave under certain conditions. And, pretty reliably the same over and over again. And it's reliable what happens. It goes. People start to hear about it. It starts to collect up, novices, and the novices come in and they do really, really well, and they tell all their neighbors and all their mates and show off, and all their mates and neighbors show up and they do it and they do well as well, and they go, rah! And everybody runs around saying how brilliant it is. And then it goes absolutely ballistic as the final wave of lemming investors show up, and they all jump in and go along and behave crazily, and then it blows up and everybody dies like they just did in Korea. Yeah, I mean, that's the perfect example. I mean, you could just, run Google Translate on it and it would look like the dot-com bubble. And interestingly enough, it looks like it's turning around and running on again. Now, I first thing in the morning, I go, what's the cost be done? Oh, it's up 2.5%. Oh, well, have a good day today then. So, it's bubbles tend to be quite predictable. And you can look at them and go, well, is that the end of the bubble? Yeah, it looks like it. Oh, now it's down here. It will bounce and then it will calm down and maybe it will go sideways from here. Or you've got to bear in mind this AI is a thing and a half. And, it's a big, big, hairy deal. And it's already building up backlash, which shows you how powerful it is. I mean, the internet went under the radar for quite a long time before all of a sudden it started to create backlash. And AI is getting backlash already because, it is such a powerful tool. A lot of people are scared of it. And rightly so. Well, not rightly so. They shouldn't be scared of it. They should just be, training up on the tool and start chopping trees down with it.
I want to go back to copper. You brought up copper earlier, and it's a topic that we've talked about before. Like gold and silver earlier in the year, copper has been on a bit of a price run in 2026. I think we're at or near all-time highs. So I want to get your take on copper market dynamics right now and how you're getting exposure to that sector if you are at this point.
Okay, so I mentioned in the last time I was on the show that copper was great, and maybe the show before that. And so I am in copper and I am long, and it's done really well, but you ain't seen nothing yet. It's going to double from here. To me, that's clear. Some people who are more qualified than me say it's going to go even further than I think it's going to go. I think 30,000 a ton is a thing. And they say, and they should know because they actually used to stand in a square and shout at people about these things, in the rings, they say 40,000. I know. I would hate to be right and him wrong. But I say 30,000. And there's more of it than they say there is, but there's less of it than is needed. So if you speak to copper bulls, they say, oh, and I made that mistake because I was under the impression there was just not enough of it, but there is just about enough of it. But the enough is got to be a bigger number now. It's going to be a much bigger number, and there won't be enough of it, and it will do its run. It just looks like a pre-breakout gold to me. And, so I'm just waiting for, well, I'm not even waiting for it. I've got fairly good exposure to copper, but I'm not a plunger. I wouldn't have, say, 40% of my money in copper. I'd have, 5-7% in copper and all the other things, because quite often, people go, oh, copper double. Wow. I go, well, Intel, $20, 150. Why would I care about copper? And I care about copper because it's going to go up and I'll have some. But what I'm trying to say is copper is just another asset. It'll do really, really well. It could double. I'm pretty sure it will. The miners might do even better. Might not. Miners, they just don't seem to be that correlated with the actual underlying, which really annoys me. They can be more correlated with each other than the blooming thing that they dig up. So, way more correlated. I had a chart. There's these people called Priced in Gold Elite, and it's a set of charts that price everything in gold. They don't, it's like the chart is denominated in gold. So as gold goes down, something will go up. but it hasn't changed on the market, but you can just get more ounces for it. Yeah. And when gold goes up, it goes down. So it just prices everything in gold. And when you price the gold miners in gold, they're all over the place. They're absolutely all over the place. And you look at that and you go, when I was a child, they taught me that gold mines were meant to go up more when gold went up. It's certainly not in the blooming chart. It's almost the opposite. Gold goes up, they go down. You go, what's that? Anyway, so I don't get that part of the way that miners work. Certainly not gold miners anyway, although I did all right with gold miners during this run, as you would do. You can't really go wrong, can you? But it's all about assets that are going to appreciate, whether they're commodities, whether they're stocks, whether they're bonds. I mean, if I didn't hate bonds so much, I'd be interested in bonds right now, because even though they say they're all going to go, through the shredding machine, I think at some point, so it's probably going to be a long way off because I tend to see this stuff coming way too far in advance, they're going to be knocking interest rates down. They're going to be QEing to get interest rates down. And of course that'll be inflationary, yeah, and all that. Of course it will be. But they just do it. They're just going to do it because they need massive injections of liquidity into the American markets, because the AI people need a huge amount of cash to build out. And America has to have that build out because China's got that build out already, nailed on, because it's got 250% more energy. Yeah. It's got vast amounts of energy supply, so much so that when Hormuz went south, they just couldn't be bothered. They stopped buying any oil. Oh, you don't need it. We've got a year's worth of supply in reserves, unlike America. And by the way, we won't even use that. We just burn a bit more coal because we've got so much energy. We just use what we like. And we're building nuclear power stations, like 50 of them right now. And we've got a load anyway. We've been building, 3 coal-powered fire stations every quarter for the last 20 years. So blah, blah, blah. But America's got to catch up with that. So how's it going to do that? It's going to have to print money, isn't it? Yeah. So all assets will go up because they have to print money because people are going to need to borrow it to build all this stuff out. That's just AI. But what about all this re-onshoring, all this reindustrialization? Where's that money coming from? Where's that capital? So the capitalists can build out their factories. Where's that coming from? Going to have to print it, aren't they? So they're just going to have to print a load. And they're not going to have that pushing interest rates through the roof, are they? So what they're going to do, they're going to do what they always do, which is QE, or not always, ever since 2007, or ever since Greenspan, just going to QE it. Hey, you got some debt, have you? Give it to me. I'll pay a good price for it. There you go. Have some cash. It's just a mechanism to print money that isn't so inflationary as just printing it. Because inflationary is only deeply inflationary when you do what they did in COVID, which is hand it out to everybody. And then everybody goes down the supermarket and your prices go through the roof. Now, if you hand it out to the evil 1%, all the billionaires, what do they do with the money? They invest it, don't they? So where does the money go? It goes into the financial system. And the billionaires don't spend it. They've got nothing to spend it on. Yeah, so they own it, apart from when they die and the government gets half of it back. Yeah, they own it, but they don't spend it, do they? They're not even close to spending it, most of them. I mean, private jet, what does that cost you? A few million a year? A yacht? Oh, okay, well, $200 million. I got 20 billion, but I'll have one of them. Well, where does that all go? That goes straight to all the people that build the yacht and all the people that sit on it and clean it. And, it goes everywhere, doesn't it? So, all these people that say, hey, the government should take that money off them and do what with it? Well, spend it. Oh, that's going to be great. That is. That's going to be inflation everywhere. And, and the poor people are going to keep it, are they? I don't think so. They do what they've always done, which is go spend it. And also they need to spend it. So that's what they do in South America. That's why they've got their inflation rates over there, because they just print money and hand it out to everybody rather than just hand it out to people that have got no use for it and just put it in the banking system when the bank lends it out to the companies that employ you. Yeah. I mean, it's not like they're not Scrooge McDuck. They don't turn into gold and put it in a swimming pool in a vault and go swimming in it. Now, if they did, yeah, you might as well take it off them. But no, they go give it to the bank who says, we'll deal with this. Let us deal with this. We'll lend it to people. Yay. And they'll borrow it and they'll build things. In fact, you can borrow it back off yourself.
Well, I think as always, you leave us with so much to think of. And as we're starting to wrap it up, I wonder if you have any final thoughts that you would leave investors with. Looks like we're coming out of the summer. We're almost ready to head into the final half of the year. Anything currently that's on your mind?
I like to make big calls, and if I'm wrong, I'm wrong. I think I've got a reasonably good record of fluking it and getting it right. But this is what I see coming up. I see it's going to be a good run. Now, there can be like, boing, there can be corrections and recoveries, quick recoveries like we've seen this year. And, you know, the Trump blunders can punch short-term holes in what I'm about to describe. But I think there's going to be a strong market pretty much from now onwards until right around to next May. And I stop it at May because my crystal balls, I've only got a certain amount of range. And also because, selling May and go away was a very good piece of advice this year. Wish I'd taken it. Well, actually, I don't know because I've had a round trip of about 12% on my portfolio. My portfolio doesn't move like that. It's boring. 12% down and back again from maybe, 1st of June to now. Say 3 months. But now I think we're going to there will be increased volatility, but we're going to have a very good period. But the big picture is we are in the early stages of a bubble that can run for a couple of years and maybe longer. It's just a question of, is this like 95, 96 or is it 98? And it's definitely not 2000 in my book anyway. So it's either one of those two. Yeah. And it's a very hot market and prices are very, very high. And I look at them and I go, oh, sacre bleu, how many $1 trillion companies, trillions. That's like, there's only 8 billion people in the world. Yeah. So that's like $120 a head for $1 trillion. So like everybody in the world is like $500,000 of Nvidia or something like that. I mean, 5,000 billion. So say there's 10 billion people in there. It's $500 a head. Everybody, including, some Sudanese fishermen. Yeah. 500, everybody each. Oh, but that's hurt me. That sort of mass has hurt me for 20 years. I've been looking at that. That's the top. Now, really? That's $1 for every American, or that's $1,000 for every American, like a $300 billion company in the US, et cetera, et cetera. But, it doesn't seem to affect things. And the AI is just a monster. It's just a kind of Godzilla of a thing. And that's going to be a massive increase in productivity. And that's going to make everybody, well off. And, some people won't feel well off because certain people just make so much money that they'll just be, it'll be silly. Well, already you've had Mr. Musk become a trillionaire for 10 minutes. And, that would have been unheard of back in the 90s. You had 50 billion and you were the richest man in the world. Now it's 20x. So, I think we're going to be seeing that Pareto effect going forward. But, it's going to be an amazing period, particularly for anybody that embraces it, engages with it and takes all advantage of it as much as they can. And I'm seeing people doing that now. And, I see a lot of people, older people actually, who are jumping on this stuff, which is kind of impressive because, I've spent my whole life pioneering technology in various weird and wonderful, wacky areas. And it's always been the young. It's always been the very, very young who grab it. And then if you're over like 35, you go, oh, what's that? No. But now it's like 68-year-olds and vibe coding. So that's quite interesting because if he's going to unleash all those people that are too old to get hired, i.e. anybody over 40, the economic ramifications are massive and massively beneficial. And anybody that's very worried about it should stop worrying about it and make sure they're on the right side of the curve.
Well, I think that's a nice place for us to wrap it up right now. And of course, in the future, we'll come back and we'll check on some of the points that you've raised today. Thank you so much for coming on to talk. This was really useful as always.
Great to be on, Charlotte. And, I'm quite happy when I make blunders to discuss them, because I'm more interested in giving people insight into the way that this stuff works. I mean, I've mentioned a few stocks now, which, it's only examples of what I'm trying to get across as the thought process. And, it's the process of your investing that's key, not the shares in your portfolio. Because if your thought process is right, the shares will be right. And if your thought process is wrong, the shares will be wrong. And if your shares are wrong and your thought process suddenly become right, your portfolio will change pretty quick.
Well, also great point to finish with. Thank you again so much. And once again, I'm Charlotte McLeod with investingnews.com, and this is Clem Chambers.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.